Hey guys, I welcome you guys to another beautiful session this morning whereby I'll be showing you some secrets behind one of the strongest candlestick reversal patterns. And these candlesticks are very important and they are very strong on the higher time frame, mostly monthly time frame, daily time frame, weekly time frame. These three time frames are very important, but you don't have to pay attention to it on the 4 hour, 1 hour, 30-minute time frame, but you have to pay attention to these candlestick reversal chart pattern whenever you see them on monthly time frame, daily time frame, and then weekly time frame. So in today's class, I'm going to show you backtest and show you some of the uh, past activities. Now, the first one that we want to talk about is the evening star. Tweezer top. Whenever you see this tweezer top, whenever you spot tweezer top on this three higher time frame, monthly, weekly, and daily, at the zone where you want to buy, don't trade that day. Don't trade the following day because there's going to be a lot of manipulation whereby the sellers want to take out some sell stops. Tweezer top represents bearish reversal chart pattern. And whenever you spot this candlestick pattern at the point of interest where you want to buy, right? Do not trade the following day. For example, maybe this is Monday candlestick. Let's say this is Monday candlestick. This is Tuesday candlestick, right? Now, the formation of the two candlestick will give us tweezer top, right? And this close at the point of interest at our area where we want to buy our point of interest, right? Our PO high. Do you know what you're going to do the following day? Don't trade market. Stay away from the market. If this is Tuesday, wait for candlestick uh to form on Wednesday and pay attention to the reaction of the price action the following day. Then you can come back to the market on Thursday. When you spot this tweezer top at the key level at point of interest where you want to buy or when you want to buy, right? Don't trade the following day because there's going to be a lot of manipulation whereby the sellers we want to take out stop losses, the liquidity resting below certain key zones, right? All these things are very important, and I'm going to show you like 1 year historical data so that you can backtest this on your own to help you to understand how this candlestick works and their reaction in the market, right? Now, this is tweezer top. Let me show you some example uh, on chart. Now, this is a beautiful example of tweezer top representing bearish reversal chart pattern. Now, look at it. This another one. The formation of these two candlestick. This one is a bullish candlestick, bearish candlestick. But the formation of the two candlestick is tweezer top, right? This tweezer top, right? Now, I made a statement that if this candlestick close at the point of interest where you want to buy, don't trade the following day or don't even bother to enter the market at all because market will make attempts to take out stop losses, set stops below that key level zone. Set stops below that key level zones. You understand? Imagine this is Monday, this is Tuesday candlestick, Wednesday candlestick, but on Thursday, but you want to trade the market, you enter like this. What is going to happen? Market will take out your stop losses. Market will take out your stop loss. right? What do you have to do whenever you spot this at a key level? Is a situation, is a sign or an indication that the seller want to keep on selling down until they take out all the liquidity below this key level zone where you want to buy. You just have to skip the following day and pay attention to the reaction of the market. Sometimes market can clear them out, then close bullish, then maybe this is Wednesday candlestick may on Thursday, then you skip, you did not trade, then you come back to the market on Friday to wash out for buy, I mean, your setup opportunities, entry signal. But in a situation whereby something like this did not happen, you just have to allow the market to go. Can you see what happened? Market sold down and cleared out a lot of liquidities, right? Now, let me show you another example here so that you can understand what I'm saying. Um, Now this is another beautiful one. Now look at this bearish reversal candlestick pattern, which is tweezer top, right? Now look at the formation of this bullish candlestick and the formation of this bearish candlestick, right? Now both close at a very frequency key level, right? Now let's say we want to buy around this zone. Remember I said whenever you spot the formation of this tweezer top at point of interest, you understand, pay attention to this candlestick pattern on the monthly, weekly, and daily. You don't have any business to do with the candlestick on 4 hours. No, no, they are not that strong. But when you see this candlestick pattern on daily, weekly, and monthly time frame, don't ignore it. Stay away from the market because that is one of the reasons or an indication that the sellers want to use to take out liquidity, probably that same day or the following day, right? Now look at the key level zone here. What happened? Let's say you are using a loaded entry system to enter the market around this zone here, then you put your stop loss, risk 20 pips. What happened? Can you see the next? Let's calculate the date. Okay, this bullish candlestick closed on Monday, Tuesday. Now, what happened on Wednesday? Remember, on Wednesday, you are not supposed to trade. You are supposed to wash out what the market is going to do the following day and come back to the market on Thursday. But you don't want, maybe you are not aware of this tweezer top at point of interest or at a valid key level zone. Then you enter the market on Wednesday. What happens? Market is going to clear out the liquidity or your stop loss before going in your direction. Now, what happened after this market took out a lot of traders here at this point of interest, this frequency key level? What happened? Then the next candlestick that form on Wednesday closed bullish. Then the market continued the movement to the upper side, right? That's another example. So let me show you another example. Now, this is another example here. Can you see there? We have a very frequency key level zone around this zone here, right? Then tweezer top close point of interest where we want to buy, right? On the daily time frame. I'm just using daily time frame for this tutorial, but you can also backtest and check it out on the weekly and monthly time frame as well. Now look at the tweezer top here, right? Remember the bullish candlestick close on Friday, then the next bearish candlestick close on Monday, right? Then on Tuesday, skip the market, don't trade. Come to the market on Wednesday and pay attention to the reaction of the price action at the point of interest where you want to buy, right? Now, look at this. Imagine you enter the market on Tuesday. What would have happened? You would have lost this money, right? Can you see? Enter here, reach 20 pips, where market will take out your stop loss. These are secret that people don't pay attention to in the market. You understand? Before you can know this thing, it costs you a lot of pains, frustration, losses over and over. You understand? And that's one of the things that 99% of traders don't want to accept. When you lose, when you make mistake, when you fall, is an opportunity for you to get better at what you are doing. But that is when they feel like, okay, they want to give up, they don't want to trade again. And that is an opportunity because market can show you a secret without taking something from you. It's just like a trade by barter. If you want to know more about the market with you are going to give something to the market before market. So as I was saying, all these things are very, very important. You have to pay attention to them, right? Now look at what happened at the key level where we want to buy this trade setup. There's nothing you can do. Market is going to take you out. So let me show you another example. Now look at another example here. Can you see? Let's say we want to buy this market around this zone here. Can you see this Twizzler top close at our point of interest on the daily time frame, right? Then let's say we want to buy by scaling down to the lower time frame and look out for our entry system. What is going to happen? Market will take out our stop loss. So when you spot this candlestick, don't trade. Vice versa. And I believe that you also know the opposite of tweezer top, which is tweezer bottom. And whenever you spot tweezer bottom at point of interest, don't trade the following day. Skip the next day and come back a day after uh, uh, the day that you skipped. So these things are very, very important. So that is that about the tweezer top. So let me now show you another example of evening star as well. Whenever you spot evening star, I don't know about other strategy, but I'm alluded uh forex strategy. These are the secret being able uh uh to write down inside my journal for years, and I have back tested this thing over and over because this thing made me lose a lot of money in this market. You understand? And it has helped me to learn from my mistakes, from my past trading activities. All these things are very, very important. So let me now show you another beautiful example of evening star. So whenever you spot evening star at the key level where you want to buy, skip the trade the next day. Don't even try to come back to trade. Don't even try to come back, say you want to trade. No, 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 no. So let me show you another example. These are the things that, not that you are going to see it often in the market. Maybe it will happen today, it will happen tomorrow. No, it's just something that whenever you are opportune to see it, just don't trade the market the following day. So let me show you another example. Evening star. Now let us look at evening star. Let's say you want to buy this evening star here. Let's say you want to buy the market around this zone here. This is a key level zone here, right? This is a frequency key level zone here. Let's say you want to buy the market around this zone here. Now can you see this evening star? Formation of evening star. We have bullish candlestick, the bullish candlestick. The middle candlestick can be any color. It can be bullish, it can be bearish. You understand? But the most important one is the first candlestick must be bullish. The middle one can either be bullish or bearish. But another one, the most important one, it is compulsory. The third one must be bearish, right? If you are using this evening star. So now this evening star closed at our point of interest on what's it called, on Monday. Then you want to trade on Tuesday. What is going to happen? Market, and you're using 20 pips or 30 pips, no matter the stop loss you are using, market, it depends. Maybe you are using a wide range stop loss, right? But if you are using a day trading or scalping stop loss, this market is going to clear you out. Do you see what happened? The following day, market took out liquidity, right? Market took out a lot of liquidity before buying in our direction. These things are very important. During your layout time, you can also spend more time, you understand, to backtest this thing, over and over. Don't just limit yourself to daily time frame alone. Backtest it on weekly and also on daily time frame as well. So this thing, I believe that we also know the vast version of this candlestick pattern. Now this tweezer top. So let's go to tweezer Morningstar. Let's start from Morningstar as well. So let me change this one to Morningstar. Morningstar. This is Morningstar. Yeah, let me try to draw it so that you can understand it very well. That's why I'm taking my time to explain these things. You understand? Market is a game of patience. You don't have to trade every day. And whenever you see all these things, it's a sign of market manipulation. You understand? So let me draw the next candlestick reversal pattern. So the next one is our money star. The first leg must be bearish, right? The middle candlestick can be any color, either bullish or bearish. It doesn't matter. So let's use bullish for this. I hope you guys are following what I'm doing. And after this class, if you have any question, or maybe after you've done your personal assignment and you still don't understand this thing, do not hesitate to reach out to me, and I'm going to take my time or find a comfortable or convenient time to schedule one-on-one session with you. So let me change the color of the candlestick. Now the first one must be bearish. That is rule number one. Then the rule number two can be any color, either bullish or bearish, right? Can be any color, either bullish or bearish. Why this one is a bullish candlestick? This is Morningstar. So let me show you a sample of Morningstar on chart. Now look at this Morningstar here. Let's say you are trying to what? To buy. You can see that the current, as at that time, the current structure of the market was bearish, right? Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Remember, when market is giving us a bearish sentiment, that shows that as a professional price action trader, what you have to do is scale down to your lower time frame and start looking for sell opportunity, right? At your point of interest, which is our key level zone, most especially frequency key level zone, right? Now, what happened? The Tuesday candlestick broke their support zone here, now turned into resistance, right? Now the Wednesday candlestick closed as doji, right? Then the Thursday candlestick closed as bullish candlestick uh pattern, right? The formation of this three candlestick pattern gave us what? Money start at our point of interest where we want to sell this market. Remember, when you spot this at your point of interest, do not trade the following day. You understand? Maybe you have been holding your position since on Wednesday, and what's it called? The Thursday candlestick now close to give us money. If money start like this, just exit that position, close the position, and accept it. You understand? Close the position and accept it. So you don't have to force the market, right? Now, so um so don't trade the following day, right? So let's say you try to enter the market. What happens? Market will clear you out. Market is going to clear you out. You understand? That is market manipulation. You understand? Don't trade the following day or wait for the next day after the day that you skipped. You understand? So that you can understand the price action very well, right? So let me now show you another example of what's it called? The tweezer bottom as well. Let me show you an example of tweezer bottom. Tweezer bottom. So tweezer bottom, the first candlestick have to be what? Bullish. So let's change the color to red. So this tweezer bottom. Whenever you spot tweezer bottom like this, right? Don't trade the following day, right? So let me show you an example of tweezer bottom here. So before we go, let me show another example of Morningstar. You can see that let's say you want to sell at this resistance level. Remember, this structure was bearish, lower low, lower high, lower low, right? Let's say you want to sell at this key levels, what would have happened? Market would have it's a stop loss. That's why you have to pay attention to this thing. Don't take it for granted whenever you spot them on the higher time frame, monthly, weekly, and daily. You understand? Neglect the ones on the 4 hour time frame, 1 hour, 30 minutes. They are not valid enough compared to the one on the higher time frame. So let me now show us this example of tweezer here. So this is another example. I think I just spot one here. Tweezer bottom. Tweezer bottom. Tweezer bottom. Um. Yeah, good. This is a beautiful example. Uh, you can see that the structure already changed, whereby price was forming higher low here, higher high. Then market took out the recent higher low. That's our rules. During a bullish market structure, whenever the market invalidates the recent higher low during a bullish market, that is an indication that the bullish structure is no longer valid anymore. That we are now back to bearish market. Now look at the structure on the daily time frame. We had higher low, higher high, higher low here. We wanted the market to continue the formation to form higher high here, but what happened? The market failed. Instead of market to form higher high, price form equal high, then lower low. Now, as a professional price action trader or a top-down market analyst, what you have to do is scale down and watch out for sell opportunity, right? Now, looking at this price action on a daily time frame, then on Wednesday the market broke the support, now turned to resistance. Then the Tuesday the candlestick closed to the bottom at our point of interest. That is dangerous. Imagine you scale down to the lower time frame to look out for sell opportunity. What would have happened on Tuesday? I mean on Wednesday, market would have what? It's a stop loss, right? But for those that don't understand this secret, you understand, on Wednesday they will enter the market. What happen? Market will take out their money. You understand? So that's why when you spot this thing, skip the next day and pay attention to the reaction of the price action on the higher time frame. Sometimes price will not even go in your direction anymore. Market will just change the direction to the opposite. So that's why when you see this thing, just stay away from the market. That is an opportunity for the market to take money from you. And you don't, if you want to give money to the market, give money professionally. You understand? But don't give money after you've known the truth. That okay, whenever you trade after seeing this secret candlestick reversal pattern, that is crazy. You understand? You don't have to do that. You don't have to trade all the time. Patience, patience, patience. That is the language. Patience, patience, patience. No matter how you try, how you fail. If you try, you fail. Make another effort until you succeed. That is it. That is it. And one truth is that you can't escape it. You are going to lose money. You are going to make mistake. But see your mistakes, your failure as a fee that you need to pay to get better, not a fine. But when you see it as a fine, it's going to hurt you. But when you see it as a fee that okay, I have to do this so that market can show me this. That is the mentality. That is the game. You understand? Nothing normal. If you like go to mountain, go and kill yourself, you go lose money. So that is just it. That is just it. So I hope you find this class interesting. During your layer time, take out your time to backtest this thing on your own and give me your feedback. But these are the things that I've done over and over. I've backtested these things over and over, and I see that wow, this is it. There are a lot of other secrets that I'm going to show you guys. You understand? So remember, I said I'm a loaded forex strategy only. I don't know, maybe you are using other forex strategy. It might not be like that. But according to my own strategy, you understand. Whenever you see this thing, stay away from the market. You understand? That is a sign of market manipulation. So see you guys next class.